And yes, I prepared a script. I rarely ever do that, but and see, I'm already rambling. Long time no see, but in person anyway. But I wanted to thank Heather and Amy for asking Wendy and I to participate in the Lender Wednesday call. Wendy is apparently going to be incognito with us today since his video's not working for some reason, or his camera. But anyway, we wanted to talk to y'all about a very important topic that is dear to our hearts, and that is money. Yes, all mortgage companies have it, but we all handle it in a different way. Wendy and I want to talk about a few things that are important to us at Union Home Mortgage. And as you all know, like all other lenders, we all offer pretty much the same thing. We offer VA, FHA, USD, and conventional loans. I know it sounds like everything everybody else does, but we have several products that may be just a little bit different. On our credit scores for VA, FHA, we're down to 600 again. I know with COVID, we went up to 640, but we have just recently in the last week dropped back to 600. USDA, we're at 620, and conventional, we're also at 620. And that's on primary residence conventional purchases. We offer construction to permanent financing and renovation loans, which Wendy is an expert at, so he's going to talk to you more about that. We do manufactured home loans, and I was going to take a poll to see if everybody knew the oldest age that a manufactured home could be to get financing. So Wendy, since you are my our audience today, do you have any idea what the date is?
Oh, as a matter of fact, thanks
not
to
Wendy,
you, I
not
do.
you, Wendy. I'm talking to Wendy Robinson.
Is it 99?
No, it is June the 15th of 1976.
Really?
Yes, yes. A lot of lenders have their own overlays. I hear it all the time. Can you finance a mobile home any older than the year 2000? I'm like, yeah, we can go back to 1976. But so just keep that in your mind. That's when HUD started doing the HUD stickers, when they were having their the rules of how they had to be built. And so, yes, we will go back that far. So just keep that in mind.
The only caveat, Bernice, if I may add.
No, you may not. It's not your turn yet, Wendy. I'm just kidding. Go ahead.
The only caveat to that is if the appraiser tells us the remaining economic life is, let's say, 20 years, then we can only do a 20-year amortization on that loan. I've yet to run into that on a manufactured home. I ran into it the other day on a stick-built house.
Oh, wow.
Yeah, I know, right? It was in pretty good condition, but so just an FYI there.
Okay, that's good to know because I did not know that. See, we're all learning something today. On manufactured homes, since we're on that subject, our credit scores for FHA and VA on manufactured is 620 and conventional is 640. We will do a conventional loan with as little as 3% down on a double wide, as long as it's primary residence, and we will finance them as second homes with a 10% down payment. Wendy, if you want to take it from here, then I will circle back around with a couple of other subjects when you're done with what you have to talk about.
Sounds great. Thank you, Bernice. Great job. I'm going to hit really high level on our construction perm product. It is a true construction perm loan. We close the loan. There's no modification, no second closing. It just rolls to a permanent loan after the construction is complete. We can go out as far as 12 months in our construction phase. We lock the rate in prior to closing, so that interest rate can vary based on the term of that construction phase. We're pretty aggressive right now in our conventional construction perm product. We did reduce our max loan to value from 95% down to 90% with the COVID-19 issues. We think we'll come back to 95%, hopefully very quickly, but 90% maximum loan to value. We did bump our credit score requirements up to 680 on that program. We offer conventional 10% down, FHA 3.5% down, and VA 100% financing on a construction perm loan, which I think is pretty cool.
Mm-hmm.
We will do a CP on off-frame modular homes and manufactured homes. Credit score requirements are the same across the board, okay? We do vet the contractor, just heads up on that. I.e. we want a resume as a form. We have a questionnaire we haven't complete. We do a background check. We do ask for last 2 years business tax returns. And we do call their suppliers, their references, okay? It's not an arduous process, but it's a process we think is pretty important. If it's a large regional builder, there obviously going to be some concessions there, i.e. a Bill Clark Homes or those type builders. So that's pretty much it on CP. Wendy, do you have any questions on that program? I'll also talk about our renovation product. We are still offering renovation financing, home style conventional, up to 95%. FHA 203K limited and standard, 96.5%. And we also offer a USDA renovation program. Haven't touched one of these yet. For USDA, it can't be anything structural, can't be anything cosmetic. It's got to be just a minimum to get past the standards there. But we do have the program. The credit score requirements for those programs are 660 for conventional and 640 for the FHA and the USDA products. Okay. So again, if you're not familiar with the program, if a individual's buying a property that in need of renovation, they can't get traditional financing, or they just want to add another bathroom or a attached garage or blow out the back of the house with a sunroom, whatever the case may be, is pretty cool because it allows them to buy that property and make it their own. We do require a contractor, or in some cases, we'll allow up to 3 subcontractors. We do not allow self-help. And I get that question a lot.
Yes.
I'm also going to hit really briefly on the NC Housing Finance Agency programs. We currently are not offering their down payment assistance product. We took that off the board with COVID-19. We think that'll come back very quickly, but we still do offer their MCC program. That's the Mortgage Credit Certificate program. Again, if you're not familiar with that, it's a tax credit for first-time home buyers. And for Bernice and I, more importantly, we can use that assumed tax benefit to boost their qualification, i.e. it's a dollar for dollar reduction of the monthly payment when it comes to calculating debt ratio, okay? I've got 3 in process right now where these borrowers would not meet. In this case, they're all had to be USDA, but you can use with any loan type other than renovation or CP. These happen to be USDA, and I would not have gotten a GUS or automated approval without the MCC program. I'm going to just hit a couple of real brief highlights, Bernice, if I may. I know that Heather talked about, discussing possible pain points, but just, with the realtors, help us out. Let us know if the property has a privately maintained road, if it's state maintained road, if it doesn't have any type of road maintenance. That can be a big issue up front that we need to address. Are there outbuildings? Is the property on a well and septic? So we can kind of get our hands around what inspections might be required. Is the manufactured home? Is it an all-frame modular? Those look very similar at times. And the last thing I'll mention, I seem to, it's just luck of draw. A lot of times I'll get an offer to purchase contract and I'm missing addendums. So just a heads up, to include the addendums. They seem to get overlooked sometimes. But that's all I have, Bernice.
All right. Well, thank you, Wendy. You did a good job. I want to mention something that I see quite often especially with new construction and some of these property flips that are offering, $7,000 use as you choose or something like that. That is great for VA loans, but VA loans are the only loans that allow concessions. And I've run into it numerous times. And I know that there's a lot more buyers in Onslow County other than VA. But on a VA loan, VA will allow up to 4% of the purchase price in concessions. Now that means that includes their escrow, their money to set up their escrow account, and the first year's homeowner's insurance is included in that 4%. Now the closing cost, as long as they're normal and customary closing cost, they don't have a maximum on that. But just like when the builder's offering, oh, you can have a fence and you can have this, you can have your Lowe's gift card, all that kind of stuff, max is 4%. Unconventional FHA and USDA, there's none of that. So just be aware and make sure that you know what your borrower is qualified for, what type of loan, so when you're negotiating the contract. Another thing is if the seller doesn't want to do repairs, and they just say, well, I'm going to give you a repair allowance. As long as the repairs aren't required on the appraisal, that's okay. But the repair money has to be paid to a specific contractor. It just can't be, you just can't give the check to the buyer to go do his own repairs. So, but I'm sure you guys already know that, but I just wanted to touch on that real quick too. One thing we wanted to mention about COVID, and hopefully, I mean, we have no idea how long these rules are going to be in place. You know, we hear June 30th, and then we hear the numbers are ticking back up. We've opened offices, we've closed offices. And so just to be safe, it is real important to know what your client does for a living before you start showing a bunch of houses. Because there's so many of us, you know, fortunately the mortgage people, the appraisers and realtors have all been able to work, but there's so many people out there that haven't. And just because, like dental hygienist, for instance, I've got one right now, she's been out for 4 months, but she's just gone back to work, but she has to be back at work for a certain period of time. And we've got to get pay stubs to make sure we can use her income to qualify, because if she gets back out on COVID in 3 months, they're not going to be able to make their payments. So that's something that we're looking at very carefully. We are going to do a re-verification of employment within 10 days of closing, which we do. We've always done that anyway, but we're going to get another pay stub, and we're going to get another, if we can't get the pay stub, we're going to get another bank statement to prove that their income has been continuing. On self-employed borrowers, the same way. They have added another rule. We've always gotten 2 years tax returns, but they just recently with COVID added another rule that we're going to get their year-to-date profit and loss. We can either get an audited form, which they have to pay for, or they can do one themselves, and we need 2 months business bank statements, because we've got to see that revenue being deposited in their bank account to make sure that their type of business has not been affected. So Wendy, can you think of anything else on COVID? Oh yeah, one more thing. No future income. I know, like for teachers and nurses and things like that that have been graduating from school and they've signed their contract, they're going to work in August. We can't count future income anymore. They have to actually start that job and get a pay stub. We have to verify that they're there. So that's probably the biggest change. Other than getting another pay stub right before closing, which that shouldn't hurt anybody anyway. So Wendy, can you think of anything else that I may have missed?
No, great job. Again, with the COVID-19, you nailed it. You know, and we're not just getting that verbal verification 10 days prior to closing, we're getting most recent pay stubs.
Yep.
And that's a bit of a change, but just as long as the customer's aware of that. Great point too. Know who your buyers are, where they work. Are they in jeopardy? You know, I've got several new construction deals going now where it's not a CP, it's just an in loan. And, you know, I'm having those conversations up front with the builder, the realtor, the customer. What are you going to be looking like, you think, in the next 120 days? So great job, Bernice.
Is it like a 2 months going back, do you think, or is it just that they have to be back at work? Is there like a certain time frame they have to be back?
Wendy, do you know the answer to that? I have not. I mean, I've got.
To my knowledge, it's a written verification employment and current pay stub.
Yeah.
I don't think we have a 60-day window, anything like that.
I don't think so either. No. Yeah, just so they're back and they're getting paid.
All right, hold on. I have some.
I was going to open it up for questions, but Wendy just had to step off for a minute.
I think good job, Bernice. Good job.
I think you too. You too. So I don't know where Heather went, and I don't know how long we had, but we've been for like 15, 20 minutes now. There you
I'm
are.
still here.
Okay.
I'm going to stop the recording. Hold on one second.